YouTube, it's a great day. How are you? I hope everybody is staying healthy, happy, and safe during this pandemic. So, some of you have reached out to me about getting started with a small portfolio and asking how we should get started together. So, I want to show you the portfolio that I'm managing for an elderly parent of mine. This is a small IRA amount that they have been saving into probably for a little bit of time, but due to their early retirement, they actually had it in a cash position. So after that cash had been sitting in a fund for maybe the last 5 years, it wasn't really doing much in terms of interest. So this is from my dad. He said, hey, can you take a look into this and see if we could potentially buy something? And this was right after the March 23rd crash. So if everybody remembers that crash in March, it was pretty violent. So Dad thought it was a great opportunity to just kind of get back in the market. And what I'll tell you is that there was about $11,000 in that account. So $11,000, and I'll walk you through where we are now. So as of midday, right now it's the middle of trading day, February 4th, as you probably will see this video, it is more for a guidance in terms of how you should look at balancing or creating a portfolio. And you don't need to put everything into one stock. And that's one thing I always talk about to a lot of folks, is that you need a level of diversification. It's very important to not put all your eggs in one basket. That's what my old man used to say. And you'll probably hear me talk about a lot of references to my parents and all these things. And it's really makes common sense when you're investing. No matter how sophisticated you are, there are certain things that just makes good common sense. And I hope we're going to talk a little more about that during the discussion. I'm going to walk you through his portfolio so you can see what I did with it, how I started with $11,000. There were some trades as a background that I did make when purchasing some oil companies during the crash. Either they weren't really performing too well and there were better opportunities, I moved it out. So I know some of you will ask, what about the tax implication? So are there any tax consequences? So being that my dad is a retiree, he faces a different tax bracket. So it's really on his Social Security and also what he's gonna take as a distribution. So I'm not sure if that's the right part for this video. So what I'm gonna do is take you through the portfolio, walk you through, and then if you guys have any comments, feedback, and want to hear about anything else, I would love to do that. And then as an aside, I would also like to take you through what it means to really start with a small portfolio. Not everybody's gonna have $1 million to start with. Right now, especially in a COVID pandemic time, where the market's high, we're going to do a little more and talk about what is the best time to start investing. How do you get in without having this heart attack, where if you feel that you're bought high and that the market dips a little bit, you know, there's a psychological aspect to it as well. So we're going to discuss that in some follow-up videos, but this is some of the early ones that I'm making just to kind of introduce myself and talk about what I'm doing, and maybe it's something that we can learn together. So welcome any feedback. So let's go, take a look. Let's open his account in TD Ameritrade and let's get going. So once he logs in, so this is what I was trying to share with you. So as of this afternoon, his account has reached 16,500, which is a nice milestone. And I can show you where we started from as a history. So going back, we started with just a little over $10,000. I was incorrect at the 11 mark. It was about 10,500, and this was in March. And after I made the investments, it fell to under 10, which was a little frightening again. And then it's slowly climbed its ways through the ups and peaks and the troughs. And right now we're at a good place at 16.5 over the span of just about a year. So let me go through what's in the account now from a portfolio standpoint. So we have Apple, and he owns a good percentage of Apple as a part of his portfolio. And we purchased Apple a while back, and as you can see, it's been doing very well. From the position of his cost per share and what it is now, it's almost double. Purchased at about $71 cost basis, and it's about $137 as of right now. ARKG, ARKK, those are two funds from Kathy Woods's ARC Innovation family. So G is for genomics, K is for the innovation fund. Something that's very near and dear to all of our hearts is Blink, fast charging, that's based in Florida. Want to have a perspective that it's a good company, it's going to do fast charging as a part of the EV revolution. So that's something that we added to the account. So my folks are big cruisers, like many seniors, they like cruising. So during the dip, when all the cruise lines fell, most people were selling, and I took it as an opportunity to buy. So we did stock up quite a bit with 150 shares of Carnival, and it made up a good percentage of their portfolio at that time. In fact, I think I weighted equal to investments to Apple. Ford, just a small tidbit there because of an EV play for the future and their continued profitability with the F-150 truck. We also put some in GBTC, which is our play on Bitcoin. And I think there's a lot of folks who've spoken a lot about GBTC and about Bitcoin. What I'll do is I'll give a little primer and do a quick short video on my perspective on GBTC and how I play it in terms of our investment within the Bitcoin. Made some investments in Hertz, very small, high risk, right? High risk. So both of those things are down. Picked up Bitcoin at the high of 47.90 at that time. That was when it was about $40,000 a share. Hertz as well. But I think there is a good opportunity for the rebound when the vaccine's distributed from a macroeconomic level. People will want to go back out. Car rentals will pick up. iClean is a clean energy ETF. Candy is a Chinese company that makes EVs. MRO, Marathon Oil. We actually had some good returns, or have some very good returns currently on that at 107%. We purchased that at $375 or so during the oil crisis in April of 2020. Marvell was something that we just picked up, as I mentioned, just today. So it's down already at 1.83%. So I might just add another share or two as a way of just kind of cost averaging down. It is a good stock from my research and what I think would be a good play on 5G. So again, folks, all this is my information that I have done. Please don't take it as gospel or anything as a reference to buy. I just want to put that out there. Norwegian Cruise, same thing. They like cruising. NEO is a Chinese EV, as everyone knows. Argen is a play on biotechnology, and that one has served us well. It's a smaller company, but has done well for us at 77-78%. Picked it up at 122. And then also Snow, we picked some up during the initial trading a few days after the IPO. Teladocs, which is really big right now in terms of a trend with COVID. Workhorse, and XSD is a semiconductor ETF / fund of a good number of just stocks, holdings within semiconductors. So with that, let me just take you into what else we have from a historic perspective. Let's go right into his account, and we can take a look at some of the history and orders. I haven't really day traded in any capacity. Most of these have been buy and hold situations, unless something has been really flat and hasn't gone anywhere, and I thought there were other opportunities. So all in all, I probably made about 10 trades of exchanges in the last year. And I think some of you have talked about tax implications. So nothing's going to really happen until he takes distribution as we go further. So I hope this gives you a glimpse of what I did with just starting out with just taking my dad's small 401k and trying to make some investments. He felt that was a better investment than having it sit in a bank or any type of other investment. And I thought it would do him well, given that the opportunity in March was fairly low. And, you know, it's not bad. I think he made close to about 54% in his return so far. But as they say in investing, any of the past performance is not indicative of anything in the future. So we might have to move things around. But overall, from a position standpoint, he has some solid players, and I like where things are for the long haul. So if you guys have any questions, feedback, or would like to learn more, The next part I'm going to get into is about diversification, and I'm going to use his ARKG and ARKK as the two examples. So stay tuned for part 3, and we can talk a little more about how we diversify into each one of these funds as a way of trying to maximize return and try and minimize risk. So until the next time, stay safe, be wise with your money, be frugal, and I'll see you next time.